Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, December 17th, and we are looking at Window Trader's market profile of SPY, IWM, triple Qs. And another interesting day to end the week. Very good volume, 121 million shares with the after hours still to go. Good range for all of us. Believe it or not, SPY holds 6 little cents of a gap from the dividend. We do end 9 wide. We had raised POC throughout the day, lowered it in an M period, believe it or not. Russell, incredibly, Russell took back all 3 sets of single prints from yesterday and goes out with a double distribution to the upside today. Qs end 11 wide. Look, before we get started, and there's a lot to talk about because we're going to go over all of these charts heading into the last 2 weeks of the year. This was not an easy week to trade. You know, don't believe what you see on Instagram and Twitter and wherever else with everybody saying, you know, how great this market was to trade and this and that. It was a lot of volatility, which we love, right? We love volatility and volume, but there's a difference of volatility that you could kind of pinpoint and nonsense volatility with mindless machines and retail traders just getting absolutely chopped all over the place. And that a lot of that transpired for the last 4 trading days or so. So keep that in mind. If you had a rough week, shake it off. This is not normal. If you had a good week, count your blessings and move on to another trading day on Monday. Remember, you're never as good as your best trade, and you're never as bad as your worst. Keep that in mind. Try to keep your temperature down on your mental capital. I traded very small all day today. Had a good day. I traded small all week. In fact, actually, I got into one long play of size by accident, which ended up working out for me. But for the most part, I played very small all week. I took an A, long an A. Now, you have to remember, there's a big disconnect between SPY and ES because of the dividend. SPY got down to its 50-day moving average in A period twice, and I took longs against that. The 458s, where both times it rallied enough where I made money on it. Then in B period, when we took out A's low and started flushing, started shorting, used the 460 puts at that point. I did it about 3 times, did well on 2. Third one, we started pushing up towards the end of B. I said, I'm not staying in this thing, got out of it for a loss. That was my only loss of the day on one of those small puts. And when I say small, I've been playing between 5, 10, and at max 15 to 20 contracts. That's how small I've been playing with these calls and puts because there's no reason to play bigger. Then in C period, it popped big time. So what happened today? The market came in very short. We didn't have a real inventory adjustment. It got even shorter in A and B. So what happened? We take out B's high, shorts start covering. And then once we got above the opening and above A's high, it just exploded as the shorts ran for cover. I took a long right below the opening. Didn't hold it for long because at that point we weren't above it yet, but did okay on that and missed the whole explosion to the upside. And then I did take a short play, a small one in C, which paid me when it backed off a bit. Those were the 465s. I was looking for a short in D. That would have been a really, really nice trade. I misfilmed the gap in SPY, and I got a little picky. I was waiting for it to fill the gap, and I was going to take another put play again. Nothing big because we were still running, but maybe a 10 or 20 lot. Never pulled the trigger, never got there, and we never saw it again. The only other trade, I took a couple more. E period is the one where I almost got in trouble. We stopped the one-time framing, and we filled the single prints. I took a couple of small trades around right above the opening, and then I went to add. It got below the opening. I added and double-clicked it, and all of a sudden I was long 130 calls. And before it ever really pushed in E and F, it popped up enough where I got out of all of them. Didn't make a lot on them, but got out of all of them before we flushed in E and F, luckily. Took a short in I against value high at the time, a small one. And then we had somebody on the mic. We were talking. Like I said, this was a rough week for a lot of people, even experienced people. We had one of our traders. We were on there for about a half hour, 40 minutes, describing what transpired this week and why he was having a tough time, why a lot of us were having a tough time. And that's another beautiful thing about our room, the way I think we get a lot of good education out of everybody in our trading room. And then an M period, first time against value low, took a 458 call small. So, a bunch of small trades, maybe 8 or 9 a day, lost on one, made on all the others, and they add up. And it turned out to be a decent week. So, for destinations on Monday, for the upside, we have 9 wide, which is K's low at 461.77. Then our afternoon rally high, I'm going to use I's high, 463.72. So that's almost $2 higher. Then we have today's high at 464.74 and filling the small dividend gap, 464.80, yesterday's low. Then you should have everything else I gave you yesterday with the single prints and the highs. For the downside, we don't have anything until today's low, 458.06, which is now a weekly low. Then we have last week's low, 453.56, 451.77 9 wide from November 22nd, and 448.92 weekly low. So why are those important? You're going to see on the chart. But basically, what I think is, if we take out this week's low early next week, there's a good chance we're going to go trade down back to that 448.92 level and test that again. So it's going to be interesting if we take out this week's low, because I think we could get some more downside. If we don't, then maybe we're going to stay in this balance. Now, let's go to the charts. We're going to break all 3 of these indices down after this pretty wacky week. So let's start with Russell. So last month, Russell came out of an 8-month balance and exploded $10 higher. This month, not only did we come back into this balance, we almost traded towards the bottom of it, which is 207.21. So far, we've gotten down to 210.30. So are we just going to get close to the bottom of the balance and then trade back up? Still remains to be seen. But plain and simple, after coming out of balance last month, we're right back in it. Month 9, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. So no, we're not counting March. That's when the balance started in April. 9-month balance, basically, right? Even though we had that outlier last month. Balance on the monthly. Weekly. Weekly is down. Weekly came into balance a month ago or so. Came out of it. We've been one time framing down now. 1, 2, 3. That was an inside week. Didn't stop it. That's 4, and now this week, 5. So we're one time framing down 5 weeks on the weekly, and we had come out of an inside week to the downside, although they didn't get paid much, but it's still down. Until we take out a weekly high, the weekly is down. You see this line I have here, that's a very visual area. That's basically March's low. It's my first big destination to the downside on Russell. So monthly is balance, weekly is down, daily is balance. It's a 4-day balance. Yesterday's high is the top of it. Today's low is the bottom of it. We're below the 20, 50, and 200-day moving average. So we have 2 time frames in balance, 1 down in the Russell. Triple Qs. Monthly balance, 2-month balance. Weekly. They had an inside week last week. Guess what? Another inside week. You talk about the water boiling, stretching the envelope, pushing the envelope, stretching the rubber band. Look at this. Technically, right? We had an. I'm trying to think if I would call this one time framing down on the weekly. It's purely a 3-week balance. This is going to be interesting when we come out of it. Okay? 2 inside weeks in a row. So next week's a holiday week, so you might get head fakes. But when we come out of the upside, either 398.48 or the bottom, 381.77, you go with that trade and monitor it for continuation or lack of. Your first stop on the upside would be the monthly balance high, which is 401.19. I'm sorry, the weekly balance high. If you come out of it to the downside, it would be 378.90. And then you see if you get acceptance below or above. So balance on the monthly, balance on the weekly, and the daily. I'm going to call this balance because yesterday the market was still up for 2 days. This is now a 4-day balance. Today's the low of it. Yesterday is the top of it. And then let's go to SPY and ES. Now remember, we have a disconnect, so our charts are not going to look the same on the daily by any stretch of the imagination because of the dividend. Monthly is balance. That's going to look the same. Now, weekly, you can call it balance. You could call it balance to up. We did take out last week's high, not by much. Well, we took it out by $2, but we certainly didn't spend a lot of time above there. I'm going to probably call it balance to up. I'll give the buyers a little credit. So monthly balance, weekly is balance to up. Now, the daily is going to be different. It's still balanced for me, but whereas SPY closed above the 50-day moving average only by 30-something cents, ES closed above the 50-day moving average probably by about $2. So we close right now below the 20, above the 50. Basically, for me, this is a 4-day balance right here. Again, yesterday's the high of it, today's the low of it. If we take out today's low, which would be a weekly low, we're purely down in the daily. If we take out today's high on Monday, it's still balance for me. Hope you had a good week. Not an easy week. Thanks for liking and subscribing to this channel. Come check us out at CamelbackTrading.org. Rest up, my friends. Enjoy your weekend. And we'll speak prior to the opening on Monday.